Welcome back, guys, to another video, and in today's video we'll be covering the ICT 2022 unicorn model. So here we have one on the screen. What we notice here is that we have a previous order block that was violated, becoming a breaker block. So we have initially a run on buy side liquidity before we have a market structure shift, and I find the 5 minute to be most useful when looking for these. So if you're not taking notes, I recommend taking some now. So the 5 minute is my personal favorite if you're looking for unicorn models, right? And what we see here is a fair value gap overlapping with the breaker block, right? So price is likely to be held within this breaker block, so we can safely set our stop loss. If we were to take an entry here above the breaker block and targeting sell side liquidity here, right? We can take this trade because we need to trust the model. So what we have here is a run on buy side liquidity, a market structure shift, right, as well as a fair value gap and a breaker block. Do your best to memorize this pattern, right? Do your best to memorize the pattern because it appears quite consistently. It actually happens over here as well, as we have a down close candle and a breaker block here, right, with a fair value gap occurring here for entry long, right? So we see these all the time, especially on the 5 minute, but this one in particular is quite clean, which is why I'm using it for the example. So what we can do now, because we have conviction in the model, is enter as price visits the breaker block within the fair value gap that overlaps with it, targeting sell side liquidity, as long as it makes sense relevant to where price could be headed. And here we do see some low resistance liquidity built up, so expecting price to go on a low resistance liquidity run throughout here. It makes sense that price would revisit the sell side liquidity target, as we've taken out one side of the range already. So entering short here and letting this play out. Quite a beautiful trade, right? But once again, to quickly recap in the unicorn model, we have a prior order block that causes a run on liquidity, followed by a market structure shift as we violate the order block, turning it into a breaker block, right? And then we have an overlapping fair value gap, which we can use for an entry and target opposing liquidity. Hope this helps you with the unicorn model, and I'll see you in the next video. Peace.